I think we've made it very clear that we'd like to build a Pan-African financial services business, diversified. And what we did in the last 6 months or so is that we developed a relationship with an investment bank called BGL, which is based in Nigeria. It's not an equity relationship. It's basically a relationship where we share deals. If South African corporates want to go to Nigeria, we talk to them here, and then we introduce them to BGL in Nigeria, and vice versa. The other thing that we've done is that we've developed very good relationships in the continent, in particular in Tanzania, in Mozambique, in Zimbabwe, as well as in Ghana. And our strategy is really to assist South African companies that want to get into those countries. Our strategy is not really to introduce them and get fees, but is to work with them in situations where they want to build businesses on the ground. We work with them to actually build those businesses on the ground. We've done one or two with one corporate South African, big corporate South African, where we've ended up with equity interest in the companies that they've built. Obviously, they understand their businesses much better than we do, so they would have management control. But where we come in ourselves, because we've developed relationships in these countries, we basically help them in terms of making sure that they run a sustainable, good businesses on the ground. I think South Africa will continue to be the largest driver of our earnings, and our thinking is that in the next 3 years, probably 75% of our earnings should come out of the South African market, and then about 25% in the rest of the continent. We really do not think that we should rush and go into Europe or other countries, but focus in South Africa and the rest of the continent. But in terms of the South African investment, I think that what we'd like to do is basically only invest if we have a level of influence in that particular sector or company, and also in areas where we've got expertise in-house. Where we've done very well is on the mining side, where we have a team in-house here that works on the mining transactions. And more recently, we did a transaction with Anglo American, where we set up a company called Vunani, which is a JV between Anglo American, the thermal coal side of Anglo American, Anglo Zimela, and ourselves. And basically, what it is that Anglo puts the assets that are not really core or big enough for them to put up, washing plants and stuff like that. So they put those assets in that entity, and we grow that business together. The same thing on the infrastructure and rail space. We've first gone with skills, and then we'll look for opportunities in that area. I think really that's informed by what's happened in the past, where we ended up investing in a whole lot of companies where we did not have influence. We did not quite understand the drivers in those particular companies. And when the market turned, we ended up suffering a little bit. So going forward, we now a little bit wiser. We wouldn't take too much debt. We wouldn't go with areas where we don't have much understanding in those particular sectors. Our strategy has always been build operating businesses, but at the same time grow a balance sheet through investments. And we think that the strategy should really be through what I've described in terms of identifying people with skills in their particular areas of knowledge, and then try and look for investments in those areas, as well as I think that sooner or later you're going to see some of the smaller PE companies that invested wanting to unlock value. So we're looking to see whether there could be consolidation in the PE space as well. But we're not going to do what we did in the past, take debt from the banks and invest using debt. That we're not going to do. I think we learned our lesson.